Hi everyone, this is Noresh Mirani. Today I'll be talking about our new small case top 20 microcaps. The standard CV disclaimer, this is my registration details as well as my BSc enlistment number. Keep looking at the detailed disclaimer on the website. So what is this service? So this is top 20 microcaps. It's a 20 stock portfolio, equal weight, which would imply 5% weight each. Ideally low churn or almost zero churn. So once we initiate a recommendation, we do not want to exit unless the price has done well or there has been a fundamental change in the company. This is driven purely by the value investing approach, rather deep value. So the ideal combination we are looking out for is deep value plus optionality plus positioning for luck. And in this case, what we are primarily focusing on is looking at deep value companies. Rebalancing only when needed. So what is the universe we are looking at? So it is sub 10,000 crore market cap. Companies which are super cheap due to multiple reasons. What happens in our markets is after a bear market or a prolonged time correction of 12 to 24 months, a lot of microcap companies become cheap due to market reasons, which is where there is low liquidity, there is lack of interest, there are people who are selling on the way down. And in this cases, a lot of companies come down much below intrinsic value. So what are we looking out for in such cases? Companies which are deep value, either on the assets, in some cases there would be a lot of cash, there would be a lot of real estate and other assets. Then replacement value, so when the cycle turns for a lot of cyclical companies, the enterprise value is much lower than the replacement cost of the company. Then on earnings, many a times stocks are available at very low single digit earnings multiples because of lack of growth at times, or the capex has already been done but the capacity utilization is low. So in such cases, low PE multiples, low starting multiples. Then in terms of cycle, so whenever the markets correct, there is a market cycle as well as the sector cycle as well as the stock cycle. So sometimes it becomes just cheap for multiple reasons here. Optionality, so many a times there are companies which have optionalities in terms of say an open offer, or at times delisting, or at times it could be a smaller business which could become larger, the next generation, etc. In the end, we are looking out for getting lucky in companies which are seriously cheap. But at core, they need to be sasta. Why are we looking at these companies? Because when you're buying deep value, you generally avoid the risk of permanent loss of capital or major loss of capital. The end result at times could be the companies do not end up giving you good returns or are pretty flat, so that would become a value trap. But that's the condition we are okay with, because we do not want all the 20 companies to do well, but some of them to do really well. So who's this product designed for? So this is designed for somebody who has an appetite to take out 30% drawdowns often. This happens many a times in microcaps. The capital minimum should be more than 5 lakhs, ideally more. And the holding period should be 3 to 4 years for this product. Anytime we are looking at a new idea, it is generally with a view of 1 to 3 years. So any other queries on the product, you can always email us or WhatsApp us. Thanks a lot.